Stop forcing the wheel on the wrong stocks. In today's video, I'm going to show you guys the checklist that I go through to pick winning wheel strategy stocks every time. Yo, what is going on, premium chasers? I hope you are having a God blessed day. Down below, if you comment today, you're going to get our quad option strategy playbook that's going to show you the 4 income streams that the quad option strategy deploys. So if you want that, just drop a comment down below and I'll send that over to you. And while you're down there, hit like and subscribe. Sorry, I got a little bit of a cough. So guys, today we're going to be talking about kind of the process that I go through for picking out winning wheel strategy stocks, right? Because it's one thing for, these people on YouTube, they're telling you, hey, use this stock, use this. Listen, you're an educated person, you're an educated investor, and I don't take you as somebody that's just going to get stock advice from YouTube videos. I rather show you a strategy that you can actually learn this stuff for yourself. So let's go over the shoulder. First things first. I'm going to quickly explain what the wheel strategy is if you have no idea, okay? If it's, to me, the greatest thing since sliced bread. So, number one, we sell a put on a stock, right? What selling a put means is we say, hey, you know what? We're willing to buy 100 shares of that stock in 30 days at a price that we choose and get paid a premium income up front, right? Now, that premium income, of course, does vary depending on the market conditions and the stock and yada, 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 right? But basically, we're collecting a premium and naming our price on a stock. We then wait our 30 days or whatever our expiration day is. If we get assigned, right, we move on to the next step of the wheel. If we don't get assigned, our collateral gets freed up, that money that we put up saying we'd be willing to buy 100 shares, it gets freed up to then sell another put, collect more premium. Eventually, though, right, we want to get assigned, meaning our money will be taken from our accounts and we have to buy 100 shares of stock, right? At that point, we can then do something called a covered call, selling a call. Now, here is where we don't use our money as collateral. We use our shares as collateral. So basically we say, hey, you know what? We bought this stock at, $20 and 30 days from now, I'm willing to sell it when it's $22, right? And you get paid that premium upfront as well from the options buyer. Okay. Then we wait our 30 days or whatever our expiration is. Did we have to sell our shares? Did we get assigned? If yes, we get, obviously income from our appreciation sale to sell another put. If no, our collateral, our shares are freed up to then sell another call. Now, that's a quick little 2-3 minute explanation of the wheel strategy. Obviously, there's tons of content on this channel, so make sure you go dive into that if you want to learn more about that. But I needed for you to understand this because what we want to talk about today is the quad option strategy and how this fits into finding winning wheel strategy stocks. Because I don't look at it as finding winning wheel strategy stocks. I find it as finding winning quad option strategy stocks, baby. All right. So what are those income streams that we can potentially get from a quad option strategy? Well, number one, we're collecting the premium from the cash secured puts, right? Selling that put. We're collecting the premium from the covered calls when we're using our shares as collateral. And we are collecting a dividend, right? We're collecting a dividend on our shares as well when we are running those covered calls. And if we do end up selling our shares eventually, right, depending on your strategy, right, we will make an appreciation sale as well. And this is why I like to look at these as like 4 income streams kind of in one strategy. And I love this strategy so much, guys. I just love it so much. And I think you're going to love it too, right? So let's talk about some of these stocks. Now, I got some juicy ones for you guys. I got some real nice ones here for you. So let's go over the shoulder, right? First one is Cisco, okay? Cisco is one of my favorite companies to run the wheel on. Obviously has a decent dividend as well. Now, I'm not just going to jump into these stocks and just tell you, all that. You got to go do your own research on stocks. Just because I like a stock doesn't mean you should like a stock, please. All right, we're all adults here. You're all investors. The last thing, like I said, I don't take you as somebody that's stupid. All right, but I question the people that invest based on advice they get on YouTube, and you're not that person, right? Go do your own research, educate yourself. That's what this channel is about. It's about education. It's not about copying trades in a Discord channel, guys. That's a losing game, right? It's about creating a strategy that works for you and your lifestyle. Okay. So Cisco, one of my favorite companies, taking a look at the chart here, okay? So when I'm picking when I'm going to get into or when I'm going to do covered calls, I always like to go to this chart page, and I'll usually start at the 3-month chart. I'm just looking at our 200-day moving average, which is 56, our 300-day moving average, which is 53, right? So obviously, Cisco is trading at $57 right now, so it's trading above our 200 and 300-day moving averages. For me, what I like to do is if I'm going to do a cash secured put, I love to be around that 200-day moving average, right? Now, obviously, that's in an ideal world. In the market that we're in right now, that's fantastic, right? We could see at the beginning of the month, Cisco dropped down right to its 300-day moving average, which was, in my opinion, a great opportunity to do those sell puts to get a juicy premium, as well as lowering our strike price on those puts that we were selling, okay? So, for example, here, I'm trading at 57 right now. Let me show you real quick, just this as an example, right? So if I go to Cisco, and this is why important, like, I don't believe timing the market. I don't believe in that, and I think you don't either. But there are good times and bad times to do things, all right? Can we all agree on that, right? So there are good times to sell puts, and there are good times to sell calls, right? So, for example, let's go to the Cisco right now. We're going to sell a put. Right now, if I go out 30 days, we'll go right out to, on the money at 30 days. And you could see here on the left side, we're looking at our strike prices, right? So if I just look at these 50s, for example, right? I'm only collecting $23, right? $23 on that, right? Actually, we can't even do that one because there is literally that one. No, we have to go up to 52, right? So if we go to the 52 right here, we're collecting $47, right? Now, let me show you something. If we go back to the chart, and if you had done your put when it was at 53, that 52 put would be worth probably, most likely, closer to $200 in premium that you would have collected from the options buyer for saying maybe you would buy it, right? So this is why I say, it's kind of important to make sure you're not trying to chase a setup. Now, if you want a stock, let's say you genuinely want to buy Cisco, you're like, I love Cisco, I want to buy it. What you can do is you could buy it closer around here. Be like, hey, you know what? I want to buy it at 57. I love Cisco at 57. You know what? If it hits at 55 next month, right, I'll totally get it. And you collect $91 from that options buyer today, right? Now, your delta is about 0.30 here, so about a 30% chance of that happening. Maybe that's not aggressive enough for you, right? Maybe you're like, I just really want to get a sign. Well, what you could do even on these dividend stocks is you can go, out your weekly. So we'll just do 9 days right here for next week, right? And then from here, you could select, your 57. Right? If you really want to get assigned your 56s and collect a little bit of premium along the way. Why do I do it this way? Well, number one, it gives... It kind of lowers your cost basis of the share. So for example, if I'm collecting $46 here, right, I'm essentially lowering my cost basis of my shares, which I'm buying for $56 a share. You see what I mean? Right? So I always like to get paid to do something, right? Now, if you absolutely love a stock and you're like, I just need it, I want it, that's all on you. You could just go out there and just buy the shares. I'm just showing you what I like to do. All right. So let's move on to our next stock, right? So before we actually move on. So right now, Cisco's trading right in that middle Bollinger Band. Not a really decent setup in my opinion, right? So usually this is where patient, right? Us as option sellers, we're paid to be patient. We're not chasing. We're not Picassos of candlesticks. We're not doing sketchy things, right? We don't want to. We want to keep things simple for ourselves, things that fit into our lifestyle and not staring at charts all day. So for this one, beginning of the month, this was great times to do cash secured puts. Right now, it's not the best setup. Let's move on to the next one. Another one that I like to do cash secured puts and covered calls on is Pfizer, right? So Pfizer, you could see, is trading well below its 200 and 300-day moving average of around $27. Now, it's in its middle Bollinger Band area here, right? Kind of working its way towards back up. But as you could see here, it's not at those bottom Bollinger Bands areas, but it has crossed over into over the middle. So what would be the ideal situation here? Well, number one, if you have shares of Pfizer, this is when you might want to consider looking at covered calls, right? Ideal setup for covered calls is when it's towards the top of this Bollinger Band area, like really towards the top, like 26 and stuff. But sometimes you're just not going to be able to do that, guys, right? Sometimes stocks, it may take a while for it to get to that point. So usually when it's trading in that middle to the top Bollinger Band is a decent time to take a look at and consider doing your covered calls on them, right? Because at the end of the day, the point of this strategy is to like make your money work for you. And if you're constantly always waiting for the perfect setup, the perfect this, the perfect that, those things may not come, and if they do, they don't come around often. Right? So even though you might, you would totally have collected way more premium and an appreciation stuff, you waited till it's right at the top of the Bollinger Band, you might be waiting a month, 2 months for that to even happen, right? And that's where you kind of have to weigh that into your strategy, right? Like, what is your actual strategy? What are your goals? And then building out your portfolio around those goals. Okay. Moving on to the next one is Intel. I have such a love-hate relationship with this company. I've said it many times, especially in our incubator program, but it is a great stock for quad options, right? So you can see it's trading below it's a middle Bollinger Band area. It's trading around 964 right now. Actually, let me refresh this page real quick. Cool. So it's down almost 2.5% here towards the middle. So it's just very slightly oversold, right? Just slightly oversold. But again, below its 200 and 300 day moving averages, and also a decent low cost stock. Now, again, this Intel has had a lot of ups and downs over the years, but it still has a pretty decent dividend, and we're able to do, get into it at a lower cost price. Moving on to the next one is Verizon. Verizon up a little over or close to 2% today. Taking a look at the chart here, you can see it's trading again right toward its middle Bollinger Band. So this one is above its 200 and 300 day moving averages. And the reason that Verizon is in my opinion, a great stock for this is obviously the dividend is really, really nice. But for the most part, Verizon kind of just does this, right? There's like pretty big highs and lows, which is good because a good mixture of volatility is actually good for option sellers, because then our premiums are like a little bit more juiced up and worthwhile, as opposed to like a stock that truly just stays flat. Now, both are great strategies for option sellers, right? Because when you're selling options, you're making money when the stock is plummeting down, right? Your dollar cost averaging into stocks you like and enjoy. If you're getting assignment, fantastic. You're loading up on that ammo to then run covered calls later on, right? And then on the rebound, you're then selling covered calls to collect an appreciation sale from your shares. You see what I mean? So you're kind of using both. A lot of people say selling options sucks in bear markets. I beg to differ. That's just my opinion. Like, everyone's entitled to their own thing, but in my opinion, hey, that's the time to dollar cost average into stocks you like anyway. So like, what's the big deal? It's still better than just going out there and buying them, right? At least you're collecting some premium from the options buyers. I don't know. That's just me, and I enjoy doing it. So we all have our own strategies, right? That's why you got to think for yourself with this stuff, right? Next one. A little bit more expensive of a company, but it is 3M, offering a decent dividend. Not fantastic, but a stable company, okay? Again, trading a little, just slightly above its 200 and 300 day moving averages towards its middle Bollinger Band area. And you could see a lot of these companies that I'm showing you right now in the market that we are in right now, they all had a drastic drop at the start of the month, and then they're all kind of slowly recovering, right? They're all kind of slowly taking their time. They're kind of bouncing around sideways here, and we're just seeing what's happening. And especially since it's earnings season as well, there's a lot of kind of really uncertainty in the markets, right? So this is times where it's like, when I see things like this, I know it sounds boring, but dude, this is why this strategy I think works the best, is because it's meant to be boring. The less you trade, honestly, the better off you're going to be. One of the biggest reasons so many people fail at trading and doing investing is because you trade too much. You're too emotionally attached to the result that you end up blowing your portfolio or doing like revenge trading and stuff. With our strategy with quad options, you're trading like a handful of times a month, right? You're not really doing much. You have a goal and a target that you've set for yourself, right? And once you achieve that, right, perfect, right? Then everything else is kind of like icing on the cake, right? Moving on to the next one, I have a couple others. I've mentioned Pepsi a whole bunch of times. Obviously, there's a lot of stuff they're going to need to change with their ingredients and stuff like that. But to me, I think they will be able to do that. I mean, there are hundreds of brands that are under the PepsiCo umbrella are massive. But look at this setup. It's a pretty decent setup. Trading towards its bottom Bollinger Band of 133 right here, and at 135. So let's go take a look at Pepsi right here, and let's not Pepe, come on, Pepsi right here. We'll go to the trade options. We will sell a put. We'll go out 30 days and take a look at what kind of premium. So you can see the premiums are a lot nicer. Obviously, the shares are more expensive. But if we look at like the 130s, right here, 130, we're collecting $134. Let's toss this into our cash secured put calculator. All of these are free inside of our Facebook group. Everything on this channel is free, guys. The only thing that costs money is if you want like one-on-one time, right? And I think we can all respect that, right? But all the calculators and stuff, all the stuff on the channel is free. The link for that free Facebook group is in the description. Join us. It is a vibe. I promise you, you're gonna love it in there, right? It's a really fun time. So we're collecting $139 right here. So $139. Now, obviously, guys, I feel like I have to say this. That you like, look, the market's open. This premium is constantly changing that you'd be receiving from an options buyer, right? Like, I think like if you go when you watch this video, it's gonna look different. Like, all right, so like this is the market. Things change very, very fast. This is just at this time that I'm doing this. And you can see it's at 141 now. We'll just put at 139. And then $130 stock price times 100, so $13,000 is our collateral here, and about a 1.07% return on premium at this time, right? In my opinion, that's pretty good. About a 1% return on the stock at 130, right? Now, obviously, that's a lot less likely to happen because I don't believe Pepsi has been at 130 in like 5 years. But obviously, the closer you go up to the current share price, like if you did these 134s, you're collecting $267 at this moment from those options buyers. And then showing you guys one more. Bank of America, a little bit more of a low cost stock as well, trading and has a decent dividend, close to 3%. And again, just trading right toward its middle Bollinger Band. However, trading below its 200 and 300 day moving averages, as we can see. I love to use those moving averages because if we can get into the companies that we believe in below the 200, 300 day moving marks, in my opinion, that's fantastic. If we're bullish on the stocks and we think it's long term, so be it. That's fantastic. We're able to dollar cost average into stocks with our cash secured puts, get paid the premium for it, and then when we do get assigned, we're collecting those covered calls. Guys, drop a comment for the full quad option strategy playbook. It's going to kind of walk you through even more in depth of what I did in today's video. Every single person that comments, I will personally respond that to you. And if you're somebody that's interested in a more hands-on approach with me, where I show you how you could set up an option selling portfolio for yourself, it takes about a year because, this stuff, we're not trading a lot here, right? We are not trading a lot, right? We're not day traders. We're not staring at charts all day. We're trying to do something that fits into our lifestyle, right? So if you want to learn more about that, that link will be down below in the description of today's video. Remember, guys, sell options, collect premiums, repeat. I'll see y'all tomorrow.